Between election day of 2020 and the end of February, Sundial Growers has roughly risen 613%. But that rise has primarily been due to external factors and not due to any significant change in the fundamentals of the company. Hi, I'm not a financial advisor, this is my visor, and if you enjoy Sundial Growers content, feel free to subscribe as I'm posting roughly 2 to 3 videos a week at the moment on this stock and whenever any news breaks. Now let's get back to the video. Because Sundial Growers' rise hasn't necessarily been because of strong fundamentals inside the company, it's been easy for long-term investors to overlook the stock. However, due to Sundial's cash improvement as of late, this stock should at least be on your watch list. Now, 2 of the reasons why Sundial Growers has already ran are the following. Being a cannabis stock, when the Democrats took over power in Washington, obviously that gave the whole cannabis sector a little boost, as the Democrat-led federal government will likely legalize cannabis on a federal level sometime in the future. And the second reason why Sundial has also surged is thanks to Wall Street Bets on Reddit. This was by no means their favorite stock, but it definitely was a stock and still is a stock that picked up a lot of momentum thanks to that forum. Sundial is far from a Wall Street favorite because at the moment, of all the analysts following the stock, none of them have a buy rating. And I mean, I can't really blame them. Sundial has been finding it difficult to grow, and as of their last quarter that they reported on September 30th, they've posted 5 straight losses. However, the point of this video is to talk about the cash position that Sundial now has and why that makes this stock a little bit more desirable. The stock saw a sharp rise after February 4th when the company had a $75 million registered offering. And in that announcement, the Canada-based pot company basically said that they have $610 million of unrestricted cash, which, as you can see on the screen right now, is more than any of the top cannabis companies, excluding Canopy Growth and a lower revenue company, Kronos Group. Now, to be clear, having more cash in the bank does not mean that this stock is now a buy. What makes this stock have potential is what management decides to do with that $610 million. And just so we're all on the same page, unrestricted cash is money that doesn't really have any particular purpose, meaning it's not needed to cover any imminent liabilities. And at the moment, there are not that many cannabis companies that can boast about having that much unrestricted cash. Let's take Aphria, for example, the stock with the highest revenue on that list I showed you. Aphria's current liabilities stand around $225 million, which is more than the cash it has on hand, which is roughly $188 million. And of those 6 companies on that list I showed you, Sundial has the lowest level of liabilities, which basically means that it can readily take advantage of opportunities in the cannabis space compared to its competitors. But the important thing to remember is the where and how the company deploys its cash is basically going to determine the future of this company. And we've already seen some good signs with their current $22 million investment in Indiva, which is a producer for cannabis edibles. This was a part debt equity investment, which would basically mean that Sundial Growers would own about 18.45% of the outstanding shares in Indiva. And this is a relatively easy and simple deal in a company that grew its revenue 1,000% in 12 months. And over the last 4 reporting periods, Indiva has posted a $5.86 million in revenue. So at the end of the day, having that much cash on hand is obviously a good thing. However, if the company doesn't use it right and puts it in bad investments or blows it somehow one way or another, then we're straight out of luck. All right, let's take a quick look at the charts to see what we can expect for Sundial Growers for the remainder of this week. So as you can see on the screen right now, we are looking at the 20-day 1-hour chart of Sundial Growers. I do already have the Fibonacci retracements drawn in. There are some blue lines of support and resistance that I drew in on previous videos and are still acting as support levels. The past couple days, more like yesterday, Tuesday, the stock did pop. If we zoom in a little bit, this was Tuesday, this is today, Wednesday. You can see we still have a little bit of time left in the day. It did just break below the 200-day moving average, but no worries because the 50-day moving average is right there to hopefully keep it above 120 for the remainder of the day. So if we look back and we zoom out on this chart a little bit, let's just try and find some support levels that are inside this $1.86 and 93 cent price channel that the Fibonacci retracement is giving us. So if we look Let's see. If we look basically like the $1.50 level looks pretty good. If we extend this to the left, you're going to see that it has using this $1.50 as a pretty decent line of resistance. It hit here, it hit it here. We hit it in the pre-market this morning. I mentioned this in another video. I don't know if it was on Sundial or not, but basically, psychologically, when it comes to like whole numbers or 25, 50, and 75, for whatever reason, those end up being like psychological points that end up being support and resistance. So I think that's what's happening here with the $1.50. As far as what we can expect for the next 2 days, Thursday and Friday, we have run up a decent amount this week on pretty much no news. So I would not be surprised if we ended the day low, or I wouldn't be shocked if we ended the week lower than where we currently are. Not by a bunch, but with no news, there's really no reason for this stock to run. And there are earnings next week. So again, typically when stocks go into earnings, they don't really do a whole lot because they're anticipating news. So I would expect this stock to maintain relatively flat throughout the rest of the week. I can definitely see it breaking this 150 level. And if that's the case, it looks like there's a 167-ish level that was put in place a couple weeks ago. So I would look for 167 as a line of resistance. And then if we break above that, $1.86. For the low end, as far as what we can expect, this $1.10 has been crucial for support. So I would definitely keep that $1.10 in your back pocket. And then if we do end up breaking below that, we do have $1.93 to around a 90, or we do have around 93 cents to 90 cents as another last ditch effort line of support. So if you guys like this video, I would appreciate if you guys give it a like. Let me know your thoughts on Sundial below. If you are holding, if you think the stock is going to go up after earnings, down after earnings, let me know your thoughts. And as always, I will see you guys next video.